again, from Sprott Money and SprottMoney.com, we've reached the month of April, 1/3 of the way through the year 2025. And it's time to wrap up what has been a very volatile month. This is your monthly wrap-up segment. I'm your host, Craig Hemke, and joining me is Bob Thompson. Bob is a senior portfolio manager at Raymond James in Vancouver. He's an old friend of Eric Sprott, and gee, Bob, we've known each other long enough now. We can say we're old friends too.
It's been a long time, Craig. I have two small kids at home, so what do they say? The days are long, but the years are short. But I'm not sure about that right now.
That's right.
Anyway.
That also explains why your hair is a little more white than mine. Anyways, we'll try to wrap up this crazy month here in a second. Again, just a usual reminder. I mean, this all comes to you from Sprott Money. They are the ones footing the bill to get this onto the internet so that you can enjoy it and learn from it. So please thank them one way or the other with a like or a subscribe, or visit SprottMoney.com. Get yourself some physical metal. Dollar cost average in anything is always a good strategy. So it doesn't matter, if price is high or you think the price is too low, whatever you think, go to SprottMoney.com, check out all of the deals. They'll ship it to you, insured and guaranteed if you buy more than $500. That's a pretty good deal too. Again, SprottMoney.com. All right, Bob. What a month this has been. We were cooking, and then Trump comes out with his tariffs, and then we just absolutely fall apart for a few days. But I mean, then gold goes soaring back. We have 4 days of $100 gains in 2 weeks. So as we put it all together, what are your thoughts as we get the end of the month of April?
Well, it never fails to amaze me that, markets always do that when they get some existential shock. They just, everything collapses. Gold, silver, it doesn't matter. Babies, bathwater, the whole deal. And the reason for that happening is because everybody's always over leveraged at the top, right? We saw it in 08. We saw it so many times along the way. What was it? Charlie Munger said, the only thing that destroys your financial future is liquor and leverage, right? And no, then there was another L in there, but we won't say that one. So,
Right.
It's always this leverage, right? So this deleveraging event caused everything to collapse. Gold, silver, collapsed in value. Not as bad as the others because it was pretty underowned, but it did, right? So now once we get that kind of deleveraging event that happens, then things start to straighten out, and what's supposed to go up starts to go up, and what is going to continue down continues down. But a lot of times these are kind of once in 10-year sort of events, and what leads us out on the other side is something different than what led us in to the bubble. So I think we're going to start to see that. The whole AI, I don't want to say bubble, probably is, but it's going to change the world, but you probably won't make a lot of money there because a lot of that was already priced in, right? Same thing happened with the internet bubble, but we need that sort of thing to happen in gold and silver for this money to reallocate to other sectors, right? Because if you're a portfolio manager and you're underperforming your index because all the AI stocks are going up, you're going to be buying those. You don't care whether gold's undervalued or not. You're going to be buying what's hot, right? So once that rolls over, it doesn't start to do well. You start to look for other areas, and that's when the money starts to flow into our sector. So from a macro perspective, I think we're going to have a lot of uncertainty going forward here, but that's going to create pretty good opportunity in our space.
And under the surface, Bob, we've had everyone knows we've had this great start to the year in gold, whatever, we're up 25% year to date or something like that. But, the dollar index peaked out north of 110 in early January and then hit a low last week at 98. I mean, that's a more than 10% drop. Of course, gold's going to go up in a situation like that. You think all commodities would go up, right? That's got to be good for the sector.
Right. Yeah. I once heard, which I thought was fantastic. Somebody said, if you really want to get these decade-long investment thesis correct, forgetting about the ups and downs in the short run, but a decade-long thesis, they said all you need to do is get the direction of the US dollar right, because that pretty much affects everything, right? So back in the late 90s, the US dollar DXY peaked at 120, right? 2022, it was 114, and then it peaked again, 110 recently. So yeah, we've had this peaking process in the last couple of years, and I think the US dollar is in decline for a relatively long period of time. There'll be rebounds, But in that environment, the first out of the gate is always gold, right? That's the first out of the gate. Then we start to do the catch up with silver and copper and oil and all the other commodities along the way because they're all priced in U.S. dollars. So really, when the U.S. dollar drops a lot, commodities have no choice but to go up, right? And that starts a commodity boom. And I think we've started that, and that's why I've been talking about so much how this is very similar to that 2000 to 2002 time frame from 25 years ago. I went on some shows last year, and people thought I was crazy because I said, I can see an environment where the TSX is going to start to outperform the S&P for quite a period of time. And, a lot of bad things happening in Canada here. People are like, oh, are you crazy? The Canadian dollar is going to zero. Well, here we are. The TSX has outperformed the S&P quite a bit over the last little while. And I think it's only the start because portfolio managers haven't reallocated yet. So we're in a situation where things are changing.
How far down is the TSX from its highs, from its peak?
Interesting enough, back in 2007, the TSX and the Dow were the same level.
Oh, God, really?
Today, the Dow is 40,000 and the TSX is 24,000. So,
good.
I'm a big reversion to the mean sort of guy.
Yeah.
Right? Things revert to the mean sooner or later. Will the TSX go back to be what the Dow is? Equal? Possibly, but it doesn't even have to, right? For the TSX to outperform the Dow pretty substantially. And I think we're in that sort of environment. Because the TSX isn't all commodities, but there's substantial amount of energy in metals and minerals. Gold is about 9.5% of it. So we're in an environment right now where generalist portfolio managers are going in Canada here saying, "Oh my God, I'm underperforming my index. Why am I underperforming my index?" Well, because gold's 9% of it. The gold stocks have had a huge run, and guess what? The average portfolio manager has zero gold in their portfolios.
Well, I mean, you pay attention to this stuff, Bob.
Yeah.
I mean, you're in Vancouver. You focus on the resource sector. But yet, all I read about over the last, at least the last week, is how, gold is definitely topped, and it's overcrowded sector. Like everybody, the shoe shine guy and the cab driver, everybody's buying gold now. Have you sensed in your office? I mean, are guys, coming up, knocking on your window? Hey, Bob, I want to start getting into some gold stocks, some resource stock. Anybody? Are you like a popular guy yet?
Zero. Nobody's asking about gold.
There you
Nobody
go.
cares. Nobody's asking why the stocks haven't gone up. Nobody even cares. Nobody even knows because they're still focused on the Nvidias and all the other stocks that have just done well. And as the numbers came out the other day, the gold's outperformed the S&P 500 for 25 years now, right? Since 2000. Right. And if you say that to most people, they're absolutely and completely shocked. But we're still at the beginning. It's funny. Gold got to 3,500, touched it. Everybody that I saw, and Twitter is a great place to get sentiment, right? Everybody was saying, "Oh, gold's way overbought. It's going to correct. Go back to the 200-day, 2,700, 2,800." Which it might, and still be in a great bull market. But when everybody was saying that, I don't know. I highly doubt that today. Gold was down $50 overnight. Today, now it's up 1%, right? So that bid keeps coming in, and I think there's a new whale in the room, right? And nobody knows it, right? It's China, and it's a billion, over 1 billion people, not just the government, but retail, and we're not understanding this new whale in the room yet, right?
Right.
And I think it's here to stay, and that's going to be a huge driver for this sector. And I think that's one of the reasons why the stocks haven't caught up yet, because in the West here we're like deer in the headlights. Oh, why is this happening? Right.
Right.
I'm not going to buy. Gold's not going to stay at 3,000. Why am I going to buy a stock if gold's going to go down?
And you know that, Bob, you're close to that in your daily job. I mean, does it take sell side firms kind of catching up and going, I think there's a reason why gold's going up, and them upping their forecast for then the individual analysts to start playing along?
I hate to say this, but I talked to Eric about this a few years ago, and most analysts, it's just the way the industry is done, right? Or most analysts are lemmings. They're followers, not leaders, right?
Yeah.
Because if you think outside the box a lot and you are right, you get a pat on the back. If you're wrong, you get fired. Right. So risk outweighs reward. right? Our business is all about risk and reward. So nobody's willing to kind of step outside the box too much. So yeah, when I did my book years ago, one of the portfolio managers, Rohit Segal, told me, he said, the stocks are not going to move until the analysts increase their price deck for the underlying commodity, right? So when analysts, increase their price deck to 3,000 for gold, the stocks will say, wow, people will look and say these stocks are all undervalued for $3,000 gold, but are the stocks undervalued for $2,200 gold? Maybe not, right? Maybe it's proper right now. So I think that's interesting. You got to get the analysts kind of get caught up and increase their price decks, and when that starts to happen, things will turn around. Because I think that's the thing to focus on. You can't focus on all the headlines.
Yeah.
We're stuck in an environment right now where it's going to be for the next few years. It's I've kind of coined a term that's called calculated chaos, right? That's kind of where we are right now, right? So there's just constant chaos all the time, and that's a calculated factor, right? If you maintain chaos, you can do lots of things that maybe people aren't looking for, whatever the case is. And there's an analogy to that. If you're a police officer standing at a light looking for people going through a red light, you can catch people going through a red light. But if 50 people all go through a red light at the same time, you can't do it. You can't catch them all. You can catch one or two, and the rest go through, right? So that's the environment we're in. But keep your head down and pay attention to, I think, what's going on underneath, and that's what's important.
Yeah. Yeah. And, if we are in a bull market, bull markets are just simply defined. 2 steps forward, 1 step back, higher highs, higher lows. They're always going to be pullbacks. You shared with me before, I think, what is a great analogy of the roller coaster. I'll just let you say it. I think it's great.
It's everything in life, right? I mean, we enjoy the journey. The journey is what's important, not the end. It's the journey that's important. So, my analogy is, let's say we wake up tomorrow morning and silver is $250 an ounce, just all of a sudden tomorrow morning. We'd all look at each other and go, oh, that's great. What do we do now? Right? So we're in a bull market. It's the journey that's important. Think of yourself on a roller coaster. You're not looking towards the end of the roller coaster ride. The excitement is the roller coaster ride, right? And that's what we're on right now. And it's a pretty big roller coaster. Lots of ups and downs, but that's what creates the thrill in the ride. So enjoy the journey. We're in a bull market. There's going to be ups, there's going to be downs, but we're going to get to our destination down the road. Just have a plan for when we get to the destination. Do you want to ride the ride again, or do you want to get off?
That's right.
It depends on the person, right? So,
That's right.
So think of that. Enjoy the journey. We're on a great journey here. We're on a roller coaster. It's a lot of fun.
For sure. Bob, the other we'll call it Bob's proprietary model is the mining clock. It's time for an update. Could you explain that for people who don't know what I'm talking about, and then let us know where you think we are?
Yeah, lots of things to talk about there. The mining clock is basically just a way to reverse engineer where we are in the cycle. So, 12 o'clock being kind of the top of the cycle and the beginning of the bust. 6 o'clock when we're kind of in buy territory. 3 o'clock when things are awful. That was the end of 2015. And then 9 or 10 o'clock when you should be saying, oh, this is happening in the market. Time to scale back. So we're probably around 5 or 6 o'clock right now. 9 o'clock, 10 o'clock is when the junior market starts to rally tremendously. They're raising hundreds of millions of dollars for these projects, which are probably never going to go into production, but people just want into the sector. The big companies start to pay too much for other big companies because they're rolling in cash, and people are saying, what are you doing with all this cash? So they make imprudent investments. That's 9 or 10 o'clock, and that's when you should start to look and say, we're getting near the end of the cycle. We're nowhere near that part of the cycle yet. And then 11:30 is when governments raise taxes because they're saying, oh, people are making too much money in this sector, so we better raise taxes on it, or they start to nationalize projects or whatever. So we're a long way from that area, but I think it is important. That kind of goes into the next theme, which is, people are saying, what's wrong with the juniors, right? These junior stocks haven't moved yet. Well, that's a great thing because that's telling you we're not at the end of the cycle, right? that's got to be the last thing to go, right? That's got to be the last thing to rally dramatically, right? Because money flows downhill. So once it starts to flow into GDX and GDXJ, then it starts to flow downhill. Interesting enough, the number of shares outstanding in GDX and GDXJ has been going like that when the gold price has been going like that. And that's crazy. That's craziness, really. When you think of it, people are still redeeming their gold units in the ETFs. So we got a long way to go. But the market to look at there and see where the flows are going, because you make the most amount of money at the turns, right? That's why I like to look at capitulation. I like to, not just gold and silver, but I like to look at anything that's in total capitulation. And that might be platinum and palladium right now. Interesting enough, Sprott Money sells platinum. I doubt if they're selling much platinum right now, but platinum is priced at 1/3 of the price of gold, which is way outside any norms of where platinum is. And palladium's in another area. It's hard to buy palladium, but certainly look at platinum. So those are sectors that are way outside of the norms. So this TSX Venture, interestingly enough, this year, which is a lot of mining stocks, junior mining stocks, is up 10%. Right? The S&P's down 9%. The TSX is up is kind of flat. So it's starting to outperform, and that's telling you that money's starting to go into the juniors. Now the TSX Venture back in 2007 was 3,300. Today it's 650. Can you ever imagine if you went back to half of 3,300? What if it went back to 1,600? That's a triple. That's a triple from here,
God.
right?
Yeah.
Or, that's up 200%. So money's starting to flow into there. The volumes are increasing. The TSX Venture, if you're a technical guy, that's a massive 10-year inverse head and shoulders.
Yeah, it
is. The TSX Venture. That is huge when that thing breaks out, right? And that's going to be, all these junior mining stocks are going to start to really roll. So I'm pretty excited from that perspective. When the TSX Venture is back at 2,500 or 3,000 or whatever the case is, we'll probably be at the end of the cycle. But we're nowhere near.
So look at what has happened to me over the last 15 years, Bob. Do you think getting the TSX to turn, can this be reversed? If we can reverse?
No diseases in 10 years. I heard an AI guy say it a few days ago. So there you go.
Heavens.
You look 25 again. You don't look like you're over 40 right now.
Right. All right, Bob. Well, let's look ahead as we wrap up. Again, we're a third of the way through the year. Gold's doing great. Silver is just kind of, it's up. The gold silver, you mentioned the platinum gold ratio being 3-to-1 or whatever. The gold silver ratio is 100-to-1.
So 100-to-1. That's right. When has it ever been at 100-to-1 other than in a crisis, right?
Right.
So we've only had it 2 or 3 times, and it doesn't stay at 100-to-1 for long. I think that's really important for people to know. So that there's the trade right there. It might not happen in the next 6 weeks, but there's the trade.
So how do you position yourself, and what's your forecast through the summer and into the fall? What are you telling your clients?
Well, whatever everybody is expecting to happen never happens.
Yeah,
right?
yeah.
It's already factored into the market, and it's interesting right now because we'll sit back and look. We all know gold went parabolic, and it's not, things are not supposed to go parabolic, and it's supposed to pull back, and it's supposed to pull back to its 200-day. And every single person that I've seen has said that's going to happen. So it probably won't.
Probably
might
won't
at some point, but it maybe won't right now. Until everybody believes that it won't. So, but you never know what's going to happen with gold. I think it's going to be a long way up from where it is now at the end of this cycle. But at 100-to-1 at crisis level, trading patterns for silver, that's the place to be right now. I mean, if you really want to dig down even further than that, the silver stocks, right? Because none of them are forecasting any increase in the price of silver over the next little while. So that's when you get the multiple baggers, going forward. So, that's where I position a lot of my portfolio. And the problem with that is that you just have to be patient, right?
Yeah.
I mean, we talked about the uranium trade a few years ago, kind of loaded up on those back in 2019, 2020. Well, everybody's, scratching their heads over uranium stocks right now because nobody's made any money and they're all upset. Well, I'm selling my stocks for 400% greater than they were 4 years ago, 5 years ago, and they're down. They're down some, but you just got to be there and be patient for when it happens. And I think that's, going to be the case in the silver area right now.
Yeah. Heavens to Betsy, Bob, to think you can't just double your money in 6 weeks. Isn't
I
that
know,
how it's supposed to work?
crazy.
Um, Bob, I'm sure there are a lot of people watching going, that Bob Thompson guy, he's
Mm.
pretty sharp. How does somebody reach you? And then additionally, if memory serves me right, you've got your own kind of update you send out called the Gold Digger. You
Mm.
still do that? And how can people sign up?
Sure, do the gold digger, and yeah, thanks for mentioning that. It's a two-pager, so it's nice and easy to read. Lots of links in it once a month, but it's key topics in the gold sector, what other people aren't talking about, and it's produced for mining executives and anybody that's very interested, obviously, in the sector. So Thompson Investments at raymondjames.ca. Thompson Investments at raymondjames.ca, and we'll certainly send you out the gold digger. And we talk about the mining clock a lot in there, and these interviews will be in there, etc.
I know a certain retiree legend that I know waits to read every word when it comes out. So if Eric's reading that thing, I think everybody else should probably take it under advisement.
Yeah, he's on the list. There you
Yeah, darn right he is.
go.
Well, Bob, thank you so much.
Sure.
Again, I couldn't think of a better guest to help us sum up what has been a wild and wacky month. And I hope we can do this again sometime soon.
Yep, fantastic, Craig, and really look forward to it.
And everybody else, hit that like or subscribe button. We're going to have a real busy month in May, too, that's for sure. And you don't want to miss anything this Brought Money puts out. You hit that subscribe button, you'll be notified as soon as something hits the wires, and you can get in there and read it and listen and do everything else. Like I said, the madness is going to continue, that's for sure. But for now, thank you for watching. Thank you to Sprott Money for putting all this stuff out, and we will have more great content for you on this channel as soon as we get to the month of May.